Well, a good morning from London and a good afternoon from India. I'm very delighted to be moderating this panel where I have three distinguished bankers and importantly, someone from the commercial market. The three bankers are Ranju Sigtia of ICICI Bank, Shankar Radhakrishnan of Bank of America, Rakesh Patwari of HSBC, and from the corporate world, Sumit Gupta of McDonald Pelz, the Commodities house. And between us, this session is going to be focusing on three key topics. First are the potential changes to trade corridors and whether the pandemic has accelerated such changes. Have we seen, for example, a shift away from China? And if so, how will this impact India? The second is post-COVID, where will India be setting its sights for growth? Which sectors, which geographies will be a particular focus for India? And the third is the South-South trade, and in particular, I'd be keen to discuss Africa. Will Africa provide a key gateway for Indian exporters and importers? And if so, what are the key challenges and the opportunities? But before we look forward, it's perhaps interesting to take stock and to see where we are and what the data has shown in the last 12 months. So Rakesh, can I ask you to start this panel? Please could you briefly introduce yourself and perhaps give us an update on what you've seen in the last 12 months, what the data shows in terms of business and trade flows, and which sectors have been the most prominent?
Hi, good afternoon, everyone. Good morning, Gabriel. It's a pleasure to be on this panel. I'm Rakesh Patwari. I work with HSBC. I'm responsible for the trade finance business in India. I think it's a very interesting topic, and a topic that has been the central discussion for a fairly long time. I must share that I've been looking at data quite closely, and all the more in the run-up to this conversation today. And have to confess that it's a little early for data to start talking back to us. When I look at the numbers from a country standpoint, besides of course the underlying commodity prices moving, which results in the larger balance of payments from a country perspective, have I seen a shift in terms of what India is either exporting or what India is importing, or markets that it's exporting or importing from, to a material extent from a data perspective. I was looking at the Q4 data for 2020 over 2019, and honestly, there hasn't been a material change from a data standpoint. What, however, is to me is a lot visible is the resilience of the market. And when you look at the core export and import data for, if you eliminate sectors such as gems and jewelries and nuclear power, etc., and the data that we see as a bank by virtue of our scale and size in India, I'm seeing core export and import data up, exports up 15% in terms of throughput that we are seeing as a bank period on period. And likewise, imports up 10%. So clearly, there's a lot of resilience. But when you start peeling the onion, in my view, Gabby, you start looking at what's the underlying that we're starting to see. And I think the data hasn't baked that in yet. So the second part of your question in terms of sectors or countries or corridors, that we're starting to see some signs. I think these signs became a lot more visible at the very outset of the pandemic. One was, in my view, the global dependence on certain markets from a supply chain perspective, and therefore a big debate that began was the balance between resilience and robustness. An example that comes to my mind is when you started looking at manufacturers like Hyundai, for example, who are dependent on certain critical components coming out of China, or certain bike manufacturers where again a certain critical component was coming out of China, or wind turbine manufacturers where certain critical components were coming out of India. And therefore, globally industry started looking at how do you start looking at these supply chains purely from a dependence point of view. That's one of the things that you're starting to see in my view, and that data won't change overnight because these shifts don't happen overnight. But what has happened is some of these things were set in motion, I would say 24 months ahead, when you started seeing a lot of talk about the US-China tariff conversations. COVID has just exasperated or rather accelerated the speed of some of these conversations. To me, that's one thing that has come out. And the second thing that I have to say is, I think governments have started seeing their balance of payments between certain markets or their critical supply chains a lot more closely. And that will, again, in my view, start showing on data in due course. A couple of examples, again, that come to my mind is when you look at India, for example, India is one of the largest pharmaceutical exporters in the world, but 70% of India's APIs come in from China, right? And that is dovetailing into what the regulator is trying to do in terms of incentivizing localization of APIs, supply chains, and manufacturing in the country. Or when you're looking at the US very recently coming out with a initial guidance, this is, I think, a week old, where the US said they're looking at integrated circuits, looking at large batteries, looking at APIs, some of the critical components or product suites where they depend on certain markets. How do they make it more resilient? But are you starting to see the theme play out already? No. Am I a big consumer of technology and digital today? Or we saw Deliveroo announcing its IPO in the London Stock Exchange, or a Zomato or a Swiggy in India? That's the shift, if you ask me, which is more consumer behavior. But are you starting to see corridor shifts already? A little early stage, but yes, directionally, yes.
Okay, that's quite interesting. And I was quite interested in your comment about, how resilient the Indian market has been, and the data basically has showing, or you've interpreted the data as being, there's been no material change at this moment in time. Ranju, what is your feeling? Do you concur? Do you think it's different?
On the resilience bit, I think I completely concur with what Rakesh is saying. And it's phenomenal to be part of such an insider panel, Gabriel. Thanks for putting this together, because this has representations from players in global cross-border trade, which is bread and butter business for us. And, in the initial part of the pandemic, the first quarter, we saw 40% decline in the trade volumes. And that was really a shock effect. We weren't used to kind of, seeing that kind of a decline in such a short period of time. But the next few months has seen it come back all up again. And both on the export side and the import side, I think our volumes are back. The two other trends that we've seen in the trade side, which has possibly long-term implications for how the world does trade going forward, is one is, of course, the acceleration and accelerated push towards digitization on common language adoption between different players within the bank, the focus on platforms and ecosystems. I think this is not going away in a hurry, and the something that most banks and ecosystem players wanted to do in terms of digitizing trade has found a good ground during the pandemic to go in that direction. The second is what Rakesh mentioned, that, as more and more countries become more focused or are redrawing their priorities to look more inwards and possibly, re-engaging or reshaping their foreign policies, that has also impacted the trade conversations globally. It has not showed up in data yet because some of these things take a long time for them to show up, but they will ultimately show up in how the world does trade and in which direction does trade with. So in that sense, I think the last 12 months have been fairly remarkable because it does seem to have laid the grounds for changing the way in which the world will do trade going forward, and the way it engages it with each other, the instruments, the channels, as well as the countries with which trade will be done.
Okay. And Shankar, would you like to introduce yourself a bit more and give your perspective? You're on mute.
Hi, sorry, Shankar Radhakrishnan from Bank of America. Having heard both Rakesh and Ranju, I think I concur.
We've lost Shankar. We'll come back to Shankar. Oh, let's try one more time.
Yeah, can you hear me now? Sorry.
Can do, yeah. Please go ahead.
Cut off. Yeah, sorry. Yeah, so I think I concur with the view that the data is definitely showing resilience. If I look at our own data of last year, I think if you look at the entire full year on year, there was a decline. But if I see how the decline was, it was very severe in April to June. Volume started picking up back towards September, October, and as the year ended and this year has begun, we're about, I would say, 90% of where we were prior to lockdown. That's as far as cross-border trade flows are concerned. When you look at the the local supply chain flows, a kind of domestic procurement, that again has come back to actually pretty much what it used to be a year ago prior to lockdown, typically across FMCG engineering. What I've seen is on the export finance. Yeah, I'm back. Sorry. On export finance, I think while export levels have dropped a little bit, the kind of Indian rupee rates that we're seeing are at historic lows. So I think well-rated borrowers do have alternatives other than bank funding because there are INR borrowing is cheaper. So we have seen a lot of the well-rated borrowers also looking to the markets to borrow short-term money. So demand for export finance has come up a little bit. But I think in the midst of all of this, what this COVID has really given a fillip to is the overall endeavors for clients and banks to work together to digitize. Sorry, the last point was, what we've really seen is the entire focus on going paperless and digitizing. I think there's been a lot of progress done on that front. So while a lot of this started because of the pandemic, I think once things go back to normal, I think the way we transact on the trade side definitely will be a lot more efficient than what it used to be prior to all of this lockdown starting. Yeah, thanks, Gary.
Okay, well, Sumit, it'd be really good to get the perspective from the commercial market. I like to say really that, you can forget the data, but what's it been like at the coalface? What's been the biggest challenges for you over the last, this period of lockdowns and restrictions? And what key lessons have you learnt?
Hi, first, thank you, Gabriel, for this opportunity and thanks a lot to be part of this esteemed panel. I will take a very contrary approach to the discussion because coming from the commodities, which is having a resounding success thanks to COVID. Okay, commodities face the earliest burn of COVID in the first quarter of 2020 after COVID hit, and after that, because the investments into the commodities went down, we see commodities prices have rallied from 60 to 70% in most of the commodities. I will say COVID acted as a commodity market, because it has given such a big push to green energy. Now we are talking more about copper, we are talking about green energy substitute to the crude oil, and especially coming from the perishable and the food sector, I will say most of the countries world over have become defensive. The countries who are importer of the food items, they want higher stocks at their destination because they believe any kind of food inflation can lead to a domestic revolution, can lead to problems at home. So we have seen food volume has gone up substantially. China is a driver. They came out of the COVID the earliest, and we have seen their import performance on the food side especially has increased substantially. Now, living in a La Nina year, which is a weather pattern, it has helped India substantially to increase its export of rice, wheat, and other food grains, not only to Southeast Asia, but to the new markets. We believe because we are living a new reality of inflation, we are living in dollar debasement, it is going to help India as a country, and especially our food export in the years to come. We believe we are going to live in the food inflation in years to come. And this will throw up an interesting challenge both for bankers and for the commodity traders, because the inflation, especially when it will be crude oil driven and food driven, it will be tough for government to do a balancing act. And that is where we are going to have a very interesting year ahead of us, especially from Indian perspective. Thank you.
Can I ask a follow-on question, really, with that? Because you say something very interestingly about the defensive nature now, and the domestic problems that governments will face if things start to go wrong. And really the outbreak of COVID, and maybe this is a perception I have here, where, on top of COVID, we've got Brexit. So, we're quite acutely aware of huge change. But here we're seeing an incredible pressure on the global supply chains, and effectively a dismantling of them when countries went into lockdown. And there's very much a, wishing to kind of rebase their supply chain. Have you seen that from an India perspective, or have you benefited from that in terms of having a wider market, both domestically and perhaps regionally?
I will try and answer this question from the commodities and macroeconomic perspective, especially the first part of your question on how the defensive nature has led to the evolution of supply chain. I will say we all are the creatures of our habit. So what happens when things are going normal, we fall in a routine. And COVID was a rude shock to the global supply chains. It makes you aware that you are dependent only on one origin or one factory of the world. And if things go wrong, then it can go wrong worldwide in a very substantial way. We have come out of COVID partially with vaccine and all, but our supply chains are still suffering. Look, if you look at the freight rates world over, it has rallied by around 100% in last 6 months. And there is a dash for containers to go to China because majority container lines are owned by China. So it is putting a thinking head across the world. Have we lost control of our supply chains? Have we become too dependent on one nation? Or how we broad base our supply chain? And that is where we are beginning to see all the countries are becoming more nationalist, which though is not the agenda because it's reverse of globalization to which everybody strived for last 20 years. But it is throwing interesting perspective, especially in the food supply chain, because all the countries have to come with more populous schemes. They have to distribute more free food to their population so that they stay at home. There are no problems because of the shortage of food. And coming to your next part of the question, is it throwing new opportunities to us? Yes, it is going to transform the global, even the agricultural trade flow, because you will see destinations and the countries which are importer, they are going to go for bigger stocks in the years to come. Weather patterns, which we believe, because there were no new investment which gone into commodity, the fertilizer prices are going to go up substantially in years to come, which is going to put pressure on the way we are currently planting crops and the nature of crops we are planting. So yes, we are living in a very dynamic world at this moment, and it is very difficult to see future because it is changing so rapidly. But one thing is for sure, we have changed the trajectory on which the commodity and the business and the supply chains were flowing. Now we are into a new trajectory, and it is going to help a country like India a lot.
But here's the dilemma. Rakesh was saying that he hasn't seen any change at the, in terms of the data, and you're saying that this is happening now. I mean, is there going to just be a lag in terms of the data coming through, or so the question is, when do you think all of this will be seen in the data and everybody would see it? And that's an open question to everybody.
Maybe I will take counter to Rakesh. I will try and I will say nudge him. I'll say he's a banker. He lives in a world of surety. I'm a trader. I live in a world of anticipation. So the difference at the moment is commodities are setting a path for the things which are coming our way, and banks will react to it to make things happen over a period of time. So it's a nudge to you, Rakesh.
Or to all three bankers.
Yes.
Rakesh.
I have to confess, there is a lag effect in my network. And I don't know if it's my network or what is it, but clearly one of the things that Ranju mentioned, that there's a significant shift in technology, but right now I'm in a location.
You're back.
Am I audible? Fantastic.
Yeah.
Sorry.
Yes.
It's amazing. I have to say, when you want the technology to work, that is the day when it doesn't fire very well. But if I understood the question that Sumit had, was the paradox between data and the direction of travel. Is that what you were talking about?
Correct.
Right. I don't see that as a paradox at all, Gary. Right. In fact, I'm with Sumit on this. As in, when you're seeing in India, there is a significant drive towards localization. Considering what is happening is that there's a view that India wants to be an export market as well, manufacturer for the world. But there's also a view that India is a large consumption market, right? And therefore, I think one way to look at is cross-border trade. I think something that Shankar alluded to is to also look at consumption markets. And therefore, what you're seeing a theme increasingly happening globally is manufacturing and supply chains will move closer to where the consumption is, right? And to me, that is where a market like India, that is a market where a market like China, to an extent Asia, and therefore you'll see globally a shift towards regionalization of supply chains. From an India-specific context, a good example is when you look at India's balance of payments, a large part of India's after fertilizer and crude imports, a big factor for India's deficit is electronic imports, right? And the government's come up with a staged manner where they want to increase localization. We're aware of what Apple's discussions are about. And similarly, you're seeing in other sectors. So am I seeing a shift towards India? Firstly, in my agnostic position working in a bank, and second, my biased position being an Indian. In both contexts, the answer is a definitive yes. And that's reflective in the FDI. It will not reflect in trade flows, because the other aspect that we've got to consider is that we often look at trade flows as flows of goods, right? But for example, the iPhone that I carry with myself, how much of that is technical know-how and how much of that is actually physical commodity or goods prices? And one of the things that we don't factor these days is services exports, right? And it's difficult to measure, but therefore I'm seeing a lot more shift happening to Asia and to India towards localization. I'm sorry if I missed the question, and I'm trying to play catch up while I'm trying to get the answer because of my network.
But that's fine. I think you got the essence of the question. Ranju or Shankar, do you have any comments on this, or should we move forward?
Yeah, so Gabriel, I think I sort of agree. So I think the intent is definitely there, but I think for the actual supply chain to shift and for it to actually show up in the numbers, there'll be a certain lead time, because when you're talking about putting up incremental production capacity to focus on certain specific industries. And Rakesh alluded to stuff like electronics, manufacturing of mobile handsets, the specific areas the government is targeting. But for that intent to translate into more capex, more production, and therefore part of the production going to substitute import and also then add to the export, it'll take, I'd say, a couple of years at least to start reflecting in the export numbers of the country. So intent is there, but there'll be a time lag to translate the intent into actual hard numbers, which we can see in the actual month-on-month flows.
And if I may just add to that, to what Shankar is saying, I think you need an ecosystem of support, right? So when the government came up with a different tax regime, the PLIs, you need to have supply chains, you need to have connectivities, you need to have labor reforms, you need to have land acquisition reforms, et cetera, et cetera. And therefore, you need the entire basket to come into play for the reforms to happen, really. So it's not just one play. I'll take an example of textiles, and I'm sorry if I'll just give this example, is when the world was looking to move out of China, and when we were looking at the data pre-COVID, and we said, there's so much that China wants to also reduce textile manufacturing because it's low value add. China wants to go into high value add products, et cetera, et cetera. Which are the markets that can totally address that demand? We looked at Vietnam, which can address it. We looked at which could address it. But given what China produces, our view was none of these markets put together can match the supply that China addresses today. But for that to move to India, where India has the foundation for it, requires a lot more. So, for example, when the government was setting up a textile park in Amravati or near Amravati, etc., so you need a lot of systemic changes and fundamental support for the shifts to happen. But I'm very optimistic from a direction perspective.
Can I just ask you one thing? Because the questions come in exactly on this topic. Can you point to any suggestions to what else the Indian government need to be doing to increase the manufacturing capability in India?
I think one thing which is general feedback that we get from a lot of the MNC subsidiaries is the extent of certainty around regulations, right? That's something which I think if it can be addressed, it will be a big help. The regulations in terms of direct taxes, indirect taxes, RBI regulations. That's something which there's so much of change happening in India, right? People need time to react, digest, and act accordingly. That's something which is it's a question of decision making, thinking through 5 steps ahead, and coming out with something which will stand the test of time. So I think that's something which is relevant. A lot of the MNC players that are looking to invest in India, do FDI into India, that's something you should definitely ask for.
Okay, I'd like to change the subject, if I may, and to talk about.
If I may just add one bit to it, right? I think we need to do it consistently as a country. There's a significant promise, and the world's watching us. And to me, COVID was an example for our tech services space, whether we could actually continue to deliver during COVID. So I think we've done that. So that's one part of it, which is delivering the promise in my view, which is critical for us to deliver this. And to me, that's the piece that I want to just add to what Shankar said.
Okay. You can't talk about India without talking about China. And I think, Rakesh, you talked about, the regional hub and the regional play. But, here in the UK, I read a lot about the geopolitical pressure between China and India. And Ranju, I'm going to ask you the direct question. How has that geopolitical tension impacted the trade between the two nations? Has it? And if not, why not? Why have that political tension, but not the trade tension?
Sure. I think, I'll come back to the lag effect, but broadly, first, let's start by looking at the facts as to what has happened between the India and China trade flow. On an export side, while India's overall exports declined 14% during the last 10 months, our exports to China actually increased 18%. If I look at the imports, while overall imports for India declined about 26% in the last 10 months, our imports from China declined much lower by about half of that, which is 13%. And the combined impact of these two has meant that China is now the largest trading partner for India, surpassing US. It's pipped US to be the leading trading partner for India. Clearly, this is in apparent disconnect to the other headlines that we read with respect to geopolitical issues, with respect to campaigns to boycott certain products, ban on certain imports, ban on software applications, higher duties, and higher scrutiny and approvals required for any FDI investments, clearly requiring us to do a deep dive. And having the benefit of being a bank with visibility of a lot of data and trade traffic and access to client conversations and their insights on business, we did try and understand what's going on and how are they thinking about their businesses. And I think I can summarize it in 4 or 5 aspects that I heard some of our clients and our data speak. One is, of course, the huge export jump that we saw was also driven by a lot of demand for iron ore and iron and steel that we saw from China, possibly because, they normalized their economic activity far ahead than the rest of the world, and the huge infra push that is happening in China. On the import side, there is existing huge dependence for a large capacity that we have in our solar, in our pharma, in our automobile and other segments, telecom segments, for example. And as activity picked up in these spaces, those imports continue to pick back up because of a lack of alternative market to provide that kind of a ready supply, which Rakesh again mentioned earlier. We also saw Chinese companies continue to bid for private and government projects, which again was contrary to what we would have thought earlier that, maybe they would be barred. They weren't barred, But to build greater acceptance, we've also seen Chinese companies becoming far more open to set up more local facilities and local capacities, as also to enter into tie-ups for possible tech transfer to make the conversation and success rates much better. We've also seen Chinese companies embracing the Make in India in a far more diligent way by actually, doing a lot more manufacturing here rather than just assembly. So net, if I kind of, sum all of this together, which is basically the insights that our data and our clients provided to us, it does seem to us that one, there will be a lag, especially in some of the segments where we already have a huge dependence on China, because as we push ahead on our own Make in India or self-reliance, we will need the input support from China for the intermediate goods that are required for our own export push and global competitiveness push. So to that extent, till such time as we begin to focus on intermediates, I think, the China import story will continue for some time. The tech side, which causes a lot of concern, is of course a little more nuanced discussion, because it's not just about shifting our technology sourcing from the east to the west, because the challenges will still remain the same. The risks will still remain the same. And policymakers are clearly and rightly so focused on ensuring that we create a digital ecosystem to create an indigenous, technology, either development or also a management system, so that we have a secure and easy way to now manage these technologies, etc. So short story, I think, outside of the sensitive sectors, we should see a far more balanced approach to the trade conversations between India and China. That's how we see it.
Okay. I like to pick up one point and move the discussion forward, and that is really that any domestic market is always helped by having a very vibrant exporting market. You can't just rely on your domestic market to grow your economy, and particularly in today's very global ecosystem. And I'd like to put an open question to the panel here. Post-COVID, and assume that we're out of COVID and we're now into what I think will be a very competitive market, where will India be setting its sights for growth? Which sectors and which geographies will be particularly important for India?
I think in terms of sectors, I think the government sort of tried to give its intent clear in terms of, when they're launching this productivity-linked incentive scheme. They're clearly focusing on autocom, manufacturing of handsets of mobiles, tablets, electronics. And those are some of the key areas. Plus, on the pharmaceutical side, I think Rakesh had mentioned earlier, what we learned during the course of COVID was there was a heavy dependence on the imports of APIs. So that's something they may look at trying to ensure we've got local manufacturing capability. Those, to my mind, are some of the sectors that we look at. So it's not just a combination of the sectors that form a part of our export basket now. It's also ramping up, various other industry sectors to be a much bigger share of the overall export pie.
Okay, but is there a particular geographic focus that will be a new market for India in terms of exporters?
So, if I may, Gabby, and when you look at where India exports today, based on, so the short answer to your question is, I'm not seeing a significant shift of late. What I'm seeing is actually India's interests a lot more from a regional perspective. And therefore, when you're seeing that with regards to supplies of vaccines, etc., but that's a more complex piece, because it's not only driven by the dollar values of exports that India does. But in terms of the core markets where India exports, whether it's healthcare and tech services, which are the two places that India exports, in my view, is Americas and the US and Latin America, etc. The piece that I think India could do a lot more, and is when you think of any economy and you look at an example in my view comes in mind is one of Germany, where, if I'm not wrong with my data, more than 65% of the GDP is contributed by SME exports from Germany. And therefore, India, very similarly, has a very large, unbanked, underbanked, underserviced SME ecosystem. And when you look at that space, how would you enable that ecosystem, either from a domestic manufacturing or from an export perspective. And therefore, I actually strongly believe a big opportunity from India perspective, from an export point of view, could be textiles and garments, where India could play a role. That's completely a gut-based view, beyond what we would be doing.
Sumit.
Coming from the food sector point of view, I will say post-COVID, we believe India is going to emerge as a big exporter of organic food products, especially into European and US markets. Because during this COVID phase, we have seen Indian supply chains so fairly resilient, and they were able to keep the supply chain going even during this phase. So this is one sector which I see growth, which also sets up government narrative, because 60% of population of India works in rural sector. And with these farm laws coming into picture, into more liberalized form, I believe food processing and organic food is going to gain a lot of momentum in this country.
Okay, I would have expected, and I don't know whether this is because I'm very passionate about the opportunities in Africa. You know, it's a market where historically I've done a lot of business and currently do a lot of business. And I understand that, you know, last year at the GTR conference in Mumbai, there was a specific session on Africa. You know, looking at the data, you know, the IMF was saying there's 9 countries in Africa with growth of 6% plus. The India-Africa trade has gone up 1.6 times in the last 10 years. Exim Bank India has got huge appetite and provide great support for Indian exporters. And last year, when someone earlier was talking about the export credit market, India was the biggest market globally as a geographic region. There was more ECA done in Africa than any other regional continent. So huge infrastructure demand, billion people, 2 trillion worth of economy. But it was interesting that none of you mentioned Africa.
I guess, Gabriel, I'll come in here. You know, Africa has always been extremely alluring for any global business strategist because of the large population that it has. More recently, it's also not just is it young, but also very tech savvy because it's very well connected to. And it's hugely engaged with the external market. You know, while Africa overall, we talk of Africa as one country, but effectively it's 54 countries. But net, Africa represents about 3 to 3.5% of the world's GDP, about a similar number for the world's trade. But if you look at the flows that have come from ECAs, it's quite disproportionate. Last year, the FDI it received was 5%. So clearly, I think it points to the huge amount of economic activity by way of investments in infrastructure, in manufacturing, as well as the urbanization and the opportunities that come with it that come into Africa. India is already the 3rd largest trading partner for Africa after the US and China. And why not? You know, from an exports point of view, Africa is the destination for 25% of our rice, for 20% of our automobiles, for 15% of our machinery, and also a very large market for our pharma exports, of course. On the import side, I think from a crude and LNG point of view, I think we depend for 20% of our requirements from Africa. So to that extent, I think India and Africa, and while I'm saying Africa as a homogeneous word, clearly, you know, it's different parts of Africa, and we are engaged in a very well distributed and a very well balanced way across all African countries. When we speak to our clients about what is their interest in Africa, have we seen increased investment activity from our clients? You know, traditionally, I think they focused on sectors related to energy, agriculture, and floriculture, for example, mining, coal, minerals, those kind of stuff. More recently, we've also seen interest in financial services, you know, those kind of firms looking to do business in Africa. We've seen housing firms because the retail market opportunity is also growing. And the expertise that we have in India, I think is open to be available to that market too. In the health technology sector, I think that's another sector that is looking to grow. The edutech sector, you know, which has significantly grown in India and is available as an opportunity for development and sharing of learnings and experience in Africa. So clearly, I think this is what is also leading to India's I think Africa is amongst the top 5 destinations for our FDI outflows too. I think, 1/5 of our outflows that happen from the country finds its way into different parts of Africa. What I do think can help accelerate some of these investments further is possibly this move towards a more unified market, because right now there are 50 plus different regulations to deal with in Africa, from a banking, from a tax, from a legislative point of view. I think there is a move within Africa to bring this all together and actually present Africa as a unified market, the way the world talks about it. That should help clearly. And I think it will be supported by Africa's own push to have a better balanced conversation with the world. Because right now, I think it does feel it's too tilted on one side, and it would appreciate having a partner like India to counterbalance some of the dominance of some of the other partners that are there. Okay. So in summary, you talked about South-South trade, which has traditionally been dominated by dragons and the Southeast Asian tigers. I would think the time for African safari is here and near.
Okay, and we've only got about 5 minutes left, but I'd be particularly interested in other people's perspective in terms of that closeness between India and Africa. I mean, I was particularly interested when looking at Ethiopia, which second most populous country in Africa, biggest market to India. There's 607 Indian companies already invested over $5 billion in Ethiopia. 61% of that is in manufacturing, which I found quite interesting. And also Exim Bank India has a concessional financing available to support Indian companies to do projects with the government of Ethiopia under a concessional financing. I mean, that's amazing. I mean, we don't get that here in the UK. So, there's a historical link. There's competitive advantages that you have. What's the viewpoint about whether there's going to be a real surge, maybe on the back of vaccines going from India into Africa? Do you think there's going to be a bigger push, I think, is the question.
So when I talked about financial services, it follows where real economic activity goes. And exactly to your point about Ethiopia, the kind of manufacturing activity that's happening, especially in the textiles and chemical space, I think the government there is also cognizant about the activity and opening up their own financial sector. And that's where we will see a lot more Indian banks showing their interest to set up their own operations in Ethiopia too.
Shankar and Rakesh, what are your viewpoints?
Honestly, from our client side, the exports are typically more to, so far it's been more towards, US and Europe. But we do see clients in manufacturing that are looking at, increasing exports to the Middle East and Africa region. To the extent of the size, it's still a little early for us to say at this juncture.
Thanks, Shankar. I think a couple of sectors that we see in our client conversations is consumer, you look at auto comps, two-wheelers, and you, of course, see commodities. Those are sectors where you see a lot of activity. One of the things that I think, in addition to what Ranju covered for a very comprehensive update on India, Africa, is, in my view, also somewhere currency, right, and risk management. One of the common, and if we could find together a solution to that, is I hear very often companies talking about lack of dollar availability in some of the African markets to settle payments, or lack of appetite from Indian companies to manage the counterparty risks in those markets, be it private risk or be it sovereign risks in those markets, are things, in my view, which if we could address. Yes, it's a large consumption story. It could be in Asia what Asia was 30 years back, potentially, purely because there's a lot of consumption potential there.
Well, this whole panel was about, the shift in trade corridors and what we're expecting post-COVID. I know the data is not showing anything at this moment in time, but I'm going to ask each of you to do a closing statement in terms of what you would expect to see in terms of shift in the trade corridors in, say, a year's time when looking back as to where we are today. What are your expectations? I'm going to pick on someone. Rakesh, you start.
Sorry, I would ask you to repeat the question because I lost
the question is, you know, this whole session is about trade corridors and the shift that can be expected post-COVID. What are your future expectations? You know, if we're in a year's time and the data's out, what would you expect to see in the data as to what has shifted, what has changed as a result of COVID in terms of the trade corridors?
I would see a lot more regionalization, Gabriel, and I would see a lot more intra-region trade being far more relevant. To me, from an India context perspective, therefore, I would say intra-Asia is far more, India to US and Europe was always big. To me, the two pieces that will play a lot bigger role in the next 12, 24, 36 months will be intra-Asia and India, Middle East. Because as India is also trying to look at the whole geopolitical angle, it becomes of extreme relevance. To me, these are two corridors where you start seeing a lot more traffic and flows.
I would expect the trade balance. I would also expect the trade balance to be far more balanced in our favor, with greater domestic production of a lot of the goods. So the outbound traffic could exceed, you know, what we actually import from the rest of the world.
And do you expect that to happen in a year?
In a couple of years, yes.
In a couple of years, okay.
I personally, sorry.
No, Sumit, go on, please.
So I personally believe it's going to unfurl a lot of consumption story in India, and we on the current landmass and technology, our food sectors is going to come under stress, and we are going to become a bigger importer of vegetable oils, food items across the world. So one arm of the trade that we are talking about, shift in the trade corridor, is the export side. But I will say we will also have to analyze it from the food sector import point of view, which is going to become bigger in the years to come. And potentially on the African side, Indian rice is going to have a lot of flavor in African markets, and we are going to keep our dominant position in that sector. So we are going to become a lot bigger on the food trade in years to come.
Okay.
I think in 1 year is, I think, a little too short to see any major shifts, but I think give it a couple of years, I think you'll see that some of the schemes that are being floated now for, you know, manufacturing, which start showing results in some of the manufacturing exports going up in certain segments. And overall, with that, we should hopefully see an improvement in the balance of trade for the country as a whole.
Okay. Well, thank you. Thank you all. This has been very interesting. I was surprised to see how resilient India has been in terms of, you know, its ability to manage its position as a trading nation, and that there hasn't been a deterioration in the economy, as we have seen in Western Europe and here in the UK. But again, thank you very much for your input, and perhaps maybe we'll have a discussion next year to kind of see whether our predictions as to what has happened. But thank you.